Good morning and welcome to Stock Market Today for Wednesday, May 20th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today where you can sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider that hits your inbox every trading day before markets open. So U.S. equities closed lower in Tuesday's trading, finishing near the worst levels of the day as questions swirled around a COVID-19 vaccine from Moderna. All sectors finished lower on the day, but discretionary and technology outperformed. Energy and financials lagged the broader tape. Treasuries were stronger across the curve. The dollar was stronger on the yen cross, but weaker against the euro and sterling. Gold was up 60 basis points. WTI crude added on 1%. I think it's pretty clear that trading over the past few days has sent a message that the market is extremely sensitive to hopes for a vaccine around COVID-19 as economies around the world continue with reopening plans. And as we get to the desk this morning, we're seeing a rebound. S&P futures are up 1.1% and trading near the best levels of the morning. Asian markets were mostly higher overnight, led by Japan. China did underperform. European markets are mostly lower. Treasuries are unchanged to slightly stronger, and the curve is steepening. The dollar is weaker against both the yen and the euro. Gold is down 50 basis points. WTI crude is up 50 basis points. And as we look at the S&P 500, there it is. The battle at resistance rages on. We have to wonder if today will be the day that we can finally push through. Futures hinting at a higher open. We've been highlighting key resistance in the 2950 to 3000 zone. 2950 obviously holding up as resistance here in the near term. 200-day moving average at 2998, and then 3000 round numbers resistance. So that resistance zone remains firmly in place. A break of that level targets 3110 to the upside. And should we break through 3110, you have to start thinking about the highs. Now, remember, the NASDAQ is already at the gap. We'll take a look at that a little bit later on the show. But what if we fade from here? 2750 to 2800 is some initial support. Below that, 2490 to 2670 picked up a little bit. Those are key Fibonacci retracement levels that come into play based on Monday's high. We're moving towards overbought levels using that 13-period CCI. And Chaikin money flow is bearish. So, it's a grind, right? We've been in this range for about a month now. And to me, based on the sentiment and positioning data that I see, I think a continued range would be what frustrates the most people. And we'll take a look at what I'm talking about a little bit later on in the show. Let's dive into our market in a minute. What are we writing about in our note today? Well, questions surround COVID-19 vaccine. That led to an afternoon sell-off. Remember, the big part of the rally on Monday was phase 1 news from Moderna about a potential vaccine. But as scientists kind of dug a little deeper, their conclusion was there was not much there yet, and that led to the afternoon sell-off in equities. SPY and IWM continue to battle those near-term resistance levels, and so do the Qs, quite frankly. Just at a higher price point. Sentiment is mixed while specs remain largely net short the market, and by that I mean the S&P 500. Comm services regains a leadership role, and I think that that's interesting. And futures, as I said, do point to a higher open here today. Taking a look at the power bars now and the major indices, the Dow lost 1.5% yesterday, 4 to 11 bulls to bears there. S&P 500 down 1%. 58 bulls to 166 bears, so still skewed in favor of the bears. The NASDAQ is skewed bullish and was an outperformer yesterday, down only 27 basis points, 28 to 16 bulls to bears on that front. Small caps underperformed, but still have a slightly bullish ratio, 345 to 336 on the power bar ratio there. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, large cap stocks are more bearish than small cap stocks, and the major indexes across the board are mixed. Hitting our stock of the day now. We drilled down on the consumer comm services group, and Facebook actually starting to look compelling to me. Facebook has a bullish Chaikin power gauge rating. It's in a strong trend above that rising long-term trend line. And it's in a strong industry group here. The Interactive Media and Services Group has a bullish power bar ratio. And if we take a look, we have a bullish stock that's strongly outperforming the market. Overbought, oversold indicator, getting close to oversold conditions, but not quite there yet. I'd like to see a perk up in money flow, but we've been persistently bullish over the past 12 months. So I think there's an interesting setup here. As long as Facebook is above this $200 mark, I think it's a compelling setup as a bullish idea, especially with that comm services group beginning to outperform. You do see strong outperformance on the part of Facebook. So I think there's a few ways to play this one. Obviously, you can wait for an oversold condition that sets up above 200. That's interesting. I think, you can look at it here for a partial and then add on a breakout. There's a few ways to play it. It's kind of, depends. That's unique to you as an investor, but that's kind of how I'm framing up Facebook here in the near term. So it definitely looks like a type of name that warrants consideration on the bullish side of equity portfolios, and a couple other names in that group also look interesting. But we know that leadership has been concentrated in the fan mag, and while overall we'd love to see that improve, at the same time, if those stocks continue to lead, I think it makes sense to be paying attention to them. So Facebook does look compelling as a bullish idea. Taking a look at our sector tracker, the movement of the major sectors over the last 5 days, discretionary at the top of the list, which is kind of interesting. And we're going to talk about retail services in just a bit. Materials and industrials, part of that reflation trade, trading better. We highlighted materials recently, actually. Eastman Chemical, one of the names that we highlighted here and in our notes. I noticed that was trading up 6% in early activity. Comms and tech round out the leadership. Financials, utilities, and energy are middle of the road. REITs, healthcare, and staples are at the bottom of the list. So some of the defensives beginning to come off. That's staples. Remember, we talked about healthcare yesterday, how it was at a key level from a relative perspective. So we want to continue to monitor what's happening in healthcare, which has been one of our favorite areas of the market. But obviously, we do not remain dogmatic in our views. If the facts change, we change our mind. So we're watching that relative performance of healthcare very closely. Taking a look at the industry in focus now is retail services, which has lagged over the past 6 months, lagged the S&P 500 by about 7.7%. Power bar ratio, though, is neutral, 16 bulls to 16 bears. So a little something for everybody within the retail services group, which is currently ranked number 8 of 21 subsectors that we track. Now, the names that we want to avoid: Tiffany, very bearish; Monroe, MNRO, very bearish; and PriceSmart, very bearish ratings. But there are other names that probably warrant some attention if we drill down on the group. But what's interesting to me here is that this is not a Facebook-driven rally necessarily for this group. If we take a look at the XRT, the SPDR S&P Retail ETF, we can see it as a neutral rating, but the trend is strong as it's regained this long-term trend line. Now, we've seen relative strength improve over the past month or so, and now starting to slightly outperform against the SPY. Overbought, oversold indicator rounding out of an oversold condition. Chaikin money flow is bullish, but here's why I think this is interesting, right? Because if you look at a group like consumer discretionary is doing well, but that's largely weighted towards Amazon, right? 25% of the discretionary sector is Amazon. If we take a look at XRT, this is more of an equally weighted ETF, right? Where Amazon is only a 2.16% weight, right? So this recent outperformance, improving and now slightly outperforming, is not purely an Amazon phenomena for the XRT. And that's kind of interesting to me. It makes me want to drill down on the group and see what other names are performing well. Taking a look at what's trending now, yesterday's S&P 500 gainers, losers are movers and shakers. Take Two was reiterated a buy at Benchmark, stock higher by nearly 5% yesterday. They're going to report earnings after the close tonight. Hewlett Packard, 3 3/4%. Nothing company specific driving trading there. AAP up about 3.6% on the heels of their earnings announcement. Xerox, XRX, nothing company specific driving that stock higher by 3.6%, and RE, Everest Re, of 3.3%. Again, nothing company specific there. As we've kind of gotten to the end of earnings season, the company specific data points are starting to fall off, and the more macro, and as we've seen, kind of vaccine focus has grabbed investors' attention. On the loser side of the board, Kohl's earnings report takes 7.6% out of that stock. Hess, nothing company specific, down 6%. Do note that they were mentioned positively in a sell-side research report. Capri CPRI said that they are going to delay their 10K, which took 6.5% out of that stock. Phillips Van Heusen PVH talking about a phased reopening of their stores. Stock lower by 6.4%, and Noble NBL down 6.25%. No company specific driver to the activity in Noble. Now it's Wednesday, so we look at sentiment in the market on Wednesdays, and recently started adding in some data around positioning. So the top of this slide here is a familiar chart to you, the 13-day moving average of the CBOE equity put call ratio. And it's unchanged from last week, down at that 0.6 level. That's kind of the lower bound of normal ranges for this indicator. Now, sentiment is really one of those things that becomes interesting at the extremes, right? We were extremely bullish as we entered 2020, right? And the market promptly sold off, taking sentiment to an extremely bearish level back in March, and the market promptly rallied. So we could take a look at that. We use a 13-period moving average to smooth out some of the roughness of the day-to-day data points here. The VIX has come in, obviously, from the extreme highs of over 80 back in March, but we're still around the peaks over the past 5 years. So continuing to move in the right direction, but certainly would love to see this trend lower, trend back towards those mid-teens to give us an indication of some level of normalization. Now, the bottom of the chart here is something new. Basically, what I'm looking at is the commitment of traders data on the S&P 500 futures, and I am looking at the net positioning of small and large speculators. And that's this green line here, which you can see small and large specs are net short. And they were massively net short at the lows in March, right? And the 52-period Z-score is what we're using to measure kind of normal levels. And you could see that they remain very net short. Z-score negative 2.69 here for the spec net positioning. So speculators are net short. Options traders look more bullish than bearish. Look at the range in the market. What would frustrate the most people? Obviously, it seems to me going sideways and continuing to chop around would be what frustrates the most investors right now. I'm not saying it has to play out that way, but just kind of framing up sentiment and positioning. That's kind of my view here in the near term. Now, the Qs close the gap, right? We talked about how the SPY is trading at resistance, trying to break through. The Qs are trading at their own resistance here as they've closed the gap. This is the gap that opened on February 24th that started the decline in the market, and we've rallied back and actually, faded from the top of that gap yesterday. We'll see if we can push through today at the 230 mark for QQQ. RSI is holding bullish ranges for now. Chaikin money flow has been trending lower and is in more of a neutral position. So you could see that whether you're looking at the Qs, whether you're looking at the SPYs, even if you're looking at IWM, the three major markets are all at key resistance levels right now. We lay them out in our note and our roadmap for what we think could happen should those resistance levels give way. And then finally, Comm Services is an interesting group to me as it's broken topside through this resistance area while RSI shifts to bullish ranges and it regains its leadership status against the S&P 500 or against the SPY. So interesting group, hence the Facebook call out here today. It is a holding within the communication services ETF. So I think it's something to dig in on and do some more work. That is going to wrap us up for today. Head over to chaikinanalytics.com/today, where you can sign up for a free 14-day trial. Hope everybody has a great Wednesday. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.